just 1 second, guys. Good morning, guys. This is Simon with Trade and Perform Coaching. Before we get started, just real quick, important disclaimer and reminder for all traders and investors: this webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made. The account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Let's get we're done with that. What I want to start off with is just the chart and how the market operated yesterday. It was first of all, you can see when we came into the day, we were already in trend day down, right? You see before we got to 8:30. So let me erase the lines. I'll just show how the chart looked before we added anything to it. There we go. So we're already in trend down before we ever get there. We've broken the swing. And the clue on that, okay, and I pointed this out in the room, usually when you are in trend up pre-market and you lose, I don't have all the way at the top of the chart there, but you lose the 62 retrace, which we did before the open, usually that is a death knell to the short side, right? Then as you open up the chart, right, if you go through, and you should be doing this just so you have the principles in your head of what you're looking at, right? So first of all, single prints, the pink lines are value area high, value area low. So you can see, number one, when we opened up, we bounced off of the, Tuesday's value area high, rotated up into overnight unfair pricing, the bottom end of unfair pricing, rejected back in below Tuesday's high. This is the risk when you trade in fair value, in a fair value versus unfair value. We trap back in, go back to the volume point of control. So we opened up, test the prior day's volume point of control, found responsive buyers. Second time through, traded straight through it, and you can see the third time over here we traded straight through it after initial rejection. It's a hard place to trade in general inside that prior day's volume point of control. We trade all the way through fair value. It's been a while since we've done that, right? Down into the single prints and prior day's low. You can see when we hit the, and I said in the pre-market, the important part of the single prints is the top of the single prints and the bottom of the single prints is usually where you get responses. And that's exactly what happened. Top, rotate up, bottom, take out the lows from Tuesday, trap back in, and then sweep all the way back through the range, right? All the way back to back to the single prints, excuse me, and prior day's high, then all the way back through fair pricing again. That's your AM session. That cut off at 10:30. This is pretty much where I left, right? And we got a beautiful trade down here, somewhere in here, and you could have looked for the shorts up on top. This area is difficult to trade in. Now, I want to talk about this. We've been going up for weeks and weeks and weeks, and in a bull market, this area is not as hard to trade in. But when volatility and range opens up, the fair pricing becomes very difficult to trade in, and you kind of want to try to avoid it if you know the range is wide. So next, we come back up, we get to up to top of London. This is obviously London closes, pushes a little bit further back, and then we rally slightly up into New York lunch, and then they just bomb it over New York lunch. I wasn't here. I really showed back up over here, and I was like, oh wow, look, they really took it out. So when you also look at where they got responses out of, so that's one way to read the chart, right? It's one methodology for reading the chart in the morning. But the other thing you'll notice is our support areas. This yellow zone, this was good for a very nice trade. It was over New York lunch. I wasn't here to take it. And then you'll see again, this yellow zone down here acted as very good support, both from the front and from the back. They pushed down on it a little bit, but this was late in the day. It did set up long, right? And then if you look from that last piece, when they overpressed to the downside, right? So now in the afternoon, they set the low, they push back up, and where are they going to try to bring it back to? Off the low. You have two choices in the afternoon: 50-60 retrace, right, which is right in here, or they're going to come in and try to take out the low right there at the end of the day. And you're going to see right here, they pressed really hard. What do I mean by that? See how they set the low here? And if you look at this wave off the top, right, you want to combine the waves with the swings. So this becomes 1, this becomes 2, this is not 3, and let me tell you why. It does not break a swing, and while it can bounce from there, I would suggest you ignore them for the better swings. This becomes 3 right here, and once you're done with 3 down, right, that's where you got the slingshot back up. And then if you go again from the top here, this is 1 down, right, 1 down, 2 down. Why? Because it breaks the swing. 3 down. Why? Because it breaks the swing. Now after 3 down, I'm going to start looking for the reversal on process, right? And what the clue was here is if you look at the waves, and we haven't talked about the waves in a long time, right? 1, 2, 3, and then look at that 4th wave down over here. So if you start counting from here, it went 1, 2, 3. It's a little bit of an art, obviously. So 1, 2, 3. But no matter how you looked at it, so see this wave over here? This is the wave to the low. Okay, that's the wave to the low the first time. That's your divergence on the retest of the wave. But here they took an opposite tact, right? Here's your push to the low, right here. And out of all the waves from down, from 2079, right, all the way down, 100 points down, the biggest push comes right over here, right? And what do you get when you get that biggest push down? Purple bar, POC shift. They couldn't break the low. Everyone was trapped with 30 minutes to go. And what are they going to do? They're going to slingshot and take out the highs over here on this side. Highs being the afternoon highs to the other side of the trade. Now, if I were sitting on your side of the table, I'd go, well, that's nice, Simon. You can read it all in reverse and tell us what happened. That's really cool, but how does that help me now, right? And the answer is it doesn't, except that when you're reading this thing in real time, there's 2 things you should pick up, right? If you want to start getting aggressive on how far you push your trades, you should start counting the waves. Wave 1, wave 2, right? And even if you're not going, even if you're not going to wait for wave 3 or whatever your analysis is, the majority of the time, if you wait for 2 waves, meaning a break of a swing, let me show you. See from the high up here, you go wave 1 down. Instead of looking for a trade over here, and when do you know the trade is done? Is when 2 bars are complete. When these 2 bars have finished printing, it starts working on the 3rd bar. That's when you know that auction is complete. Okay, and you start working. What that saves you with is an entire move from 2100 all the way down to 220,000. Excuse me, ADD in it, right? It saves you that move. Even if I start over here and I go, hey, I'm looking for the long, right? If I do this, wave 1, this ain't this is wave 2, right? Even if I start there, now I start looking, I still have saved all this room, 2076 to 2016. So people, guys in the room where this came from, is I was talking to Daniel down in Austin, and I was doing a coaching session with him. And Daniel responded that the 2 biggest impacts on his trading, so he trades a little bit differently. He tries to load up trades really, really big, and he only wants 1 or 2 trades a day, but he wants everything, all the stars to align, right? So what he wants to take a trade is he wants wave 1, wave 2, wave 3, and then he wants his setup. He wants wave 3 to break the swing, right? And then he starts looking for his setup, and then he starts looking for his setup from there to get the reversal, right? And if you go through your chart, so it'll vary. 24 tick will show one thing, 15 tick will show another. I would use it on a 15 tick personally because the waves get more broken up the way that it sets up, but it'll let you lean into where you're looking for a reversal. The other things that would have, when you look at this chart, that would have helped you if you're looking for a reversal on trend down. If you come back through the day, so I'm going to erase this for a second. Besides support, right, is if you make sure, like Randy does, that your last bar on that 24 tick, which is what this is purple, right? So here we go from 8:30 and outside the channel, right? And we're going to assume Randy only goes long, okay? He ends up with trade 1, trade 2, all of them extended enough to get him out so far. Purple bar being the last bar. 3, I'm going to count this. He probably scalped out of it, and he would have taken it. It was over New York lunch, right? But I'll count that. That's a stop right there. Again, New York lunch, right? Nothing here, so you miss, right? And then you end up with 30 minutes left to go with a long side there. And you probably took a stop here, although he enters on the 15, so maybe he scalped out, and you probably scalped out there. Those are his trades. It's a pretty good, that's a pretty decent day. Now, here's the downside for Randy, right? He's doing all that, and he's going to go, but we're in support, blah, 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 and I don't get my trade here. Well, that's true. And he doesn't get his trade here either, right? And he could get frustrated looking at the big rotations that he's getting off of there. Or he could just go, it doesn't matter. This is the one trade I know I can pull off, and that it adds P&L to my day, and that's what I'm going to stick with, right? So there's no one Shangri-La, obviously. There's no one Shangri-La, but it's just different approaches, right? It's different approaches, and how tight do you have to be for your entries? Okay, so let's go fix the chart up for today really quick. Here we go. I hope that was helpful for you guys. So you can see the overnight. Oh, hold on. No. Let's clean this up a little bit. Okay, let's do this. I'm gonna be behind on the open, guys, and it's quad witching, so I'm just gonna let them do whatever the heck it is they need to do, and then I'll see if I step in, and then I'll make decisions. Value area low is at the low. This goes away. Let's see, hands, volume point of control comes down here. Let's see, anomaly up here. Single prints over here, and we're open. And man, what are we going to do with this, huh? This goes away. This goes away. what do we have next? I don't even like how that profile developed. Really, you would have something like this. And this area needs to be filled in right here. I'm just going to color it white. It's in the middle. I don't know what to do with it, or green. I don't know what to do with it. It's in fair value. We can sweep that whole area. I guess we would substitute overnight. We would go Globex high, Globex low, a little bit lower than that. And then we would do overnight unfair pricing. So it would look like this. Unfair here. You can already see they bounced out of it. And unfair up here. I mean, the logical thing is for the market to come in and fill this in, right? So let's just see what she does. But I wouldn't be surprised if we chopped around inside this range. It's a big range. It's 100 to almost, like if you look at the top of that, 70 all the way down to 90. So about an 80-point range that needs to be filled in. And probably what would happen, like if you think about how they would do this, is you get above here, and they're going to start using this as support, right? And then pushing all the way through and using this somewhere between here and this structure up here as resistance. It's just a guess, right? But you have to kind of picture, well, how are they going to fix that hole? The other option is we get underneath here and come down and repair areas or test prior day's lows down through here, and we get on the underside of this 1990 to 19950. But usually after trend day down, you end up with balance, inside range balance the following day. So either way, if we took out the low like we did overnight, I'd look for it to come back in and trap back in and fill in, and we'll just see what they have. It was a really wide range yesterday, and I'm good with that. That's okay. So anyways, let's get this printed. I don't think I have anything else in here. And that red line up there is the all-time high RTH, and then the white line up here is the, here we'll change this color. That's all-time high 24 hours. We'll change it to, I don't know, red, and we'll make it really wide. And with, well, heck. Okay, and this is important. I'm going to draw this. Okay, so this is important because this was set outside of regular trading hours, and usually what the market likes to do, thank you Ron for reminding me of this, is it does not like to leave all-time highs or swing highs left overnight. It likes to come and take them out during the RTH. So eventually, no time label, doesn't have to be done today. It'll come up and it'll set a high over here in the RTH, and that usually completes the auction up, and then we come back in and do some profit taking, although last time we just went straight through it. But usually that's what you would at least anticipate happening. So so yeah, that's what I would and Leandro, good morning. That's what I would anticipate. Okay, so now let's just jump over on the let me get this printed. Thank you. Yes, sir. Sorry, keep forgetting. I'm just gonna have to throw that camera back up on top so I remember it exists. Okay, and then let's snipping tool, new picture. Copy. There's the chart levels, guys. Let's move this aside. Put it in. You will see, so the layout here goes 15 tick, 50 cent, 24 tick, and ES. That's what we have working off of here. And you'll see a couple of new, some new algos on there. I am working to get these things processed as quickly as possible. Hold on a sec. 6. So at any rate, if you go through there, and oh, the other piece, when the swing indicator lights up, you are looking for longs one direction or another, right? So let me make sure my charts are set up. Connect. Everything's right sized. And you can see how we're keep rotating up to the prior day's point of control. No, this is 15 cents. This is the 50-cent footprint right here. And don't pay attention to little red and blue white arrows. I just had to test with it today. Okay. This is the 50 cent. And then I have my 75 cent off on the screen to the right. And obviously I'll be watching that for setups. Specifically for the counts inside of them. There we go. Remember, it is quad witching. Okay, so you're going to see some violent moves in between all this stuff, right? You just are. Okay, so I want everyone to hear that about quad witching, right? It could be a great trading day. You don't know, I don't know, right? Your job is just to take your trades as they set up properly, and that is it, right? I'm going to say that again. Our job is just to take your trades as they set up properly, but what you got to integrate there is, hey, it could go wild, right? Why? It's quad witching. You don't know when they're going to bust a strike or cause a hard vertical move one way or the other, or if they're just going to sit there and chop in a tight range and lock everything down. That's why a lot of traders just like to take quad witching off. Why? It removes an element of uncertainty out of your trading and makes your decision-making process that much easier, right? It's not perfect. I'm sure there's people that kill it on quad witching. I've had good quad witchings, right? But what you don't want to do, is attempt to be perfect. Okay? You don't want to attempt to be perfect on a day like today, and you don't want to burn down your accounts today. Gregory, that's when options, futures on all markets, options on all markets expire, futures on all markets expire. What else is it? Options, futures, there's two more. I forget what it is, guys. Help me out. Oh, index options expire as well. There's a fourth one. There's a fourth horseman in there. Maybe it's bonds as well. But everything expires today, so they all have to roll over. And it causes these, today will be the biggest options rollover in history. Right. Today will be the biggest rollover in history. It's the biggest OpEx ever. And so especially in the first half hour, but so Gregory, the big deal is if it breaks, like they try to pin the strikes and not lock down the market so they can make those transactions smoothly and just roll without any problem. But if they break a strike, all hell breaks loose and it just goes wild. Massive, massive, massive volume that's being thrown at it with no control over the ranges. So hence people like to take the day off. I don't blame them. It's probably going to be benign, but if it gets wild, you got to be totally aware of it and then just sidestep it. Trading into the overnight unfair pricing. Econ in 1 minute or less. 15 seconds. And Yarshi blows. Tested the low from yesterday. OPEX. Back to retest the low. ES up while NQ is going down again. Straight down. Look at ES, just a rock. OPEX. Free falling. That is probably a very good long right there. That green dot arrow down. Once you get this pink bar, you don't want it behind the pink bar. With notwithstanding the 7 minutes to econ. That green dot down. Very, very good. I'm not doing anything. I'm waiting till we're done. But I know for future reference that's a very important marker. I want to say again, I'm not taking anything. I have not run a trade. I am as quiet as a mouse in the house. Matter of fact, I need to open my Rhythmic Trader in case I did decide to take a trade. Watch for the trap back into prior day's low for the squeeze up. Okay. Something's wrong here. Something's wrong. This can't be. There. Sorry, now I know why I'm screwed up. Apologies. There, fixed. Now that's correct on the 50 cent and the 15 cent. I was like, something's wrong. Now that should match most people. And that green dot right down there at the low was pretty damn important. Okay. That was very frustrating. File, save all. I just want to do one thing here. F6. There should be a big jump here in a minute. Watch for the trap back into prior day's low. I'm going to make sure my charts are set up for trading. Yes, agreed. That was all pretty much perfect. This triggered long, green dot down, white arrow up on the 24, right? And then this is triggering, showing us our swing longs. We're looking for them. We were at an extreme. Now we're trapped back in. Now we'll see what happens. That was beautiful. Now I wish I'd taken it. Shot back into the low. Watch for a complete flip back and take him back. This low holds. Right, you can see that inverse head and shoulders right there. There's a long way back to the other side. We've tested. We've taken out lows. You hold the low, and that looks good. Testing below that prior day's low now. Ed, are you? Can you hear me right now? So what I was talking about. See, this is on the 50 cent. It'll be on everyone's chart eventually. I just got to get on there. See that green dot into the low, followed by that arrow up right there. So it doesn't work every time, right? It says same thing here, but it works a lot. Green dot followed by arrow. Green dot followed by arrow, and the inverse of that would be the blue dot followed by the arrow over here. Plus you add location, But see how the swing indicator set up to go long? That's why that was so important. Does that make sense? So when you add all the pieces together, I'm still working on a solution for this, but same thing here. That little blue dot, followed by arrow down, gave the roll. So really what you would say, so the other way of looking at that is going, well, if I get the blue dot here, what do I have on my 50 cents? So what do I have on the 24 cent? Which what you would have ended up with was, this is an old single prints against a prior day's low. And so you had the purple bar down, right, and the arrow, pink arrow up, released to the upside. That would be how that would look off of consolidation, or the ship left out of consolidation. Also, the other thing to note is that we've trapped back in. Now, we're trapped back in on prior day's low. And after 2 days down, that can, as you know, that can lead to quite the rotation back up. That trade against that low to see if it'll trade back up is a patience trade, by the way, which obviously is not my strong suit. But I would still be looking long biased, I think. The arrows on the pink bars, right? The arrows on the pink bars. You got to be biased in the way you're working, but highly effective for scalps, right? Especially at the fourth channel. If you're going to put rules to it, its fourth channel will be the rule, right? And again, I'm biased to the long side, so. And that's the open, so why mess with that? Oh, sorry, 50 cents out of place. Like I said, that trap inside prior day's low, you had to think they're going to squeeze the shorts on that. Hey, does anyone know, is Apex still down on the reset thing? Like, they had a horrible problem initiating new accounts the other day, and now, like the last I heard, they were having difficulty just setting up new accounts. So see that little blue mark right there? Usually when you get an arrow down after it, you have at least a good scalp on your hands. Just trade-wise, we're not in anything. Right, like your natural target would be back to this. To the prior day's point of control. That was a nice trade. Did anyone take the long? I'm not saying you should have. I'm just asking if anyone did. I fixed it, Dan. Even if you didn't get it, you should note it down. Like that's what I was saying pre-market. You break the low, you trap back in. That's the target. And that's the example right there. Blue followed by arrow down, or on the 50 cent this, arrow down. I would target back into this structure right over here. So we'll see what happens. Tweezer's top. Really? No. No. Wow, this is messed up. Okay, fair. Let's try this. See how it's starting to chop? There's just nothing in fair pricing, which is fine. There just isn't. Again, what told of this roll was that little blue dot right there. Now, see how the short swing is set up? Here, we just don't have location, right? So you always have to evaluate that short swing against location, right? It's always the same thing over and over, right? Location, setup, algo, just go through the thing over and over again. It's pretty straightforward. It's pretty straightforward if you do the process over and over, right? So I'm looking for two things, either the arrow on a no supply, no demand bar, right? So there are some failures, both on the 50 cent and the 75 cent, but the point is the RR that comes along. Next you add this blue dot, right? So this is purely scalp, yellow dot, and you do not want this to go close behind here like this. You want to you got to know which algo you're using and how you're using it, right? So if you're looking for a swing, you don't want to operate off of this chart at all. You want to be on the 50 cent. So you get the 50 cent, right? Now you're looking for the red arrows down, right? To push you lower. That's exactly what you're looking for. The best one is the red arrow on a no supply, no demand bar, and it's a 1 bar stop. You don't want it to close behind, and then you want to target areas lower. This was the target lower as stated earlier. Next, you are looking on various time frames for the short and long signals to set up. Again, this algo is still being developed, but when this sets up, so blue is for long, red is for short, right? So when this sets up, I am looking for A, B, C, D, some type of setup to the short side or to the long side, right? So the next piece is when I get this. So I got to know whether I'm on the 15 tick or the 50 cent tick, and whether I'm swinging it for a bigger push or I'm scalping the crap out of it. For example, if I took this trade here, I did not want to see that down arrow orange. Now it's going through a consolidation. That tells me that they pushed pretty hard. But what have they pushed into, right, is the question. What have we pushed into here that I'm looking at? And the answer is nothing. Like, the logical thing is to come back and test yesterday's low at this point, right? And the other thing I can do is, so see, now I have this green bar will keep reprinting until you get 2 bars up. I want to explain that. 2 bars up. So what you're looking for is the arrow up with a no supply, no demand on that bar, right? Or the shift up above this bar. That's what tells you that that bar has taken effect, and it will not reprint. That's what you want it to do. Once it prints and stays, so in this case it would print and stay at 19,965. There's very few algos on this that the first bar isn't the print, but on that algo, the first bar is not the print. It's the second bar, right? The exceptions to that is to get an arrow up. The regular arrows, the blue and the pinks, right? After you get that, those are valid. When you have those, otherwise you have to wait. I know it's a lot of rules, right? So in this case, see how you now have 2 up? I'm now looking for my arrow up on my pink bar, and I know that low now is likely to hold. Okay, I know that I don't have to guess at that. I know it's likely to hold. Okay, so now what do I have to hold against? Well, I have to hold against the low there at 50, whatever that is, 52, right? And what would I prefer? An arrow up with an algo on it. right? Meaning the no supply, no demand. But I know that green dot is pretty powerful into the low once that second bar prints. And now what would I expect? Rotation back up to retest back up into this area is what I would expect. Okay, that's how you trade it. Okay, so now this is valid. You've trapped sellers on this bar, right? And now I would expect a lift from that is what I would look for. Okay, so I'm just sharing how I see it. You got to understand when I'm developing this, right? I'm just coming through it in a mindset of how do I fix this stuff, right? How do I get this stuff better, right? And so in order to do that, I have to be able to experiment a little bit, right? So this tells me when I have this green dot, now I'm looking for an arrow up off this chart, right? I would like the arrow up to set up somewhere down here, not all the way up here. And why do I want the arrow up? Well, why is this logical? Well, we came into overnight unfair pricing. We're backside testing prior day's low. Now I want to see if they pressed on the on my. Hold on one second. I don't have any 4x4 numbers to report. I've been watching. Hold on one sec. I also now have completed 3 waves down on the 15 tick, right? This is wave 1, broke the swing, wave 2, wave 3, right? And then I know my stops are sitting back over here. All I'm trying to do, and I know I have a long bias, so all I'm trying to do is align my trade setups with where I know support and resistance lie, along with the algos, right? And the easiest way for me to do that is to see when I get an arrow up with a no supply, no demand bar, and they are within the first 2 bars of the term, right? So this, out of no supply, no demand, good to go. No supply, no demand, I have to wait, right? That's all there is to it. So like that bar, the other thing is I don't want it out of consolidation. I always want it on the turn, right? It just makes it harder when it's coming out of consolidation. That's all there is to it. The natural target is yesterday's volume point of control, if it can get up there. Again, it's quad witching. There's no rules to today. and my focus is just to wait for the algos, right? So this is all practice for me today. I'm not having a bad day on quad witching. I hate when that happens. You feel like you wasted your day when you knew that there was difficulty, right? So all pure practice for me. That's why you don't want, guys, when I'm coaching y'all, you don't want this bar to come in consolidation. You want it to come on the turn, right? Like that on the 50 cent. Again, I want to be clear. I am not trading any size. I am just simply practicing today. That's all I am using this for. Nothing more, nothing less. Okay? Nothing more, nothing less. Pink dot star. That usually results in a pretty big trade, has been my experience. off the 24 tick. And again, you're trapped back above and inside yesterday's range. So if I was scalping, right, I would expect this bar not to get stopped, less than a 10-point stop, right, and a roll down for a scalp. And I mean a scalp only, right? A scalp only on that move. Nothing special, nothing spectacular, and it would have to align with my general philosophy. Now, I think the market's going up, right? So I wouldn't want to be shorting here if I got this signal. I'd want the opposite. I want this to push down, give me a little blue dot. We've just gone supernova on the 15 tick. We're trying to go on the 24. They're trying to trap back in. And I've got a blue arrow up on my 75 cent. All I don't have is a 4x4 number reading yet, right? So you have to decide if you're a scalper or a swing trader, which way you're going to go with this, right? If I'm scalping, no demand, no supply, with arrow inside it, fantastico, right? What I'm actually looking for, since I'm long biased, is that exact setup, only with a pink bar to the long side, is what I'm looking for to try to capture the move. And where do I want to capture the move back to? Here, here, and here. Those are my upside targets. Right now, will I get them? I don't know. What I do know is I have a bias, right? I have a direction I'm trading in, and I'm looking for my setups. So I'm not just going go long, right? You don't see me saying buy everything. What I'm saying is if I get my setup, right, and I get my scenario where I can enter the trade, get risk off, push and let the trade work, great. If your bias is short and you think we're going to zero, here, let me help you. If you're scalping, you've had a great day, right? I'm not I'm not trading at all, but here, 1, 2, bottom of the channel, top of channel. Tiny scalp, you probably got stopped on that. You had to take that twice. That kind of sucked. It stopped behind it. And then you were looking for the long down here. That was your one hit parade wonder that you could have captured, right? And then how you manage that risk is entirely up to you, right? The other thing I can see is that we're pressing underneath prior day's low into the overnight low between low and Globex, and it's creating a zone, right? Someone's going to lose in that battle. Someone's going to lose in that battle. I don't know who. And I know really to change that and to change the way the market is operating, I'm going to need it to trade above 19,975, right? That's just from another chart. I just know that's where the breakout level is. It's above all these guys, right? All these sellers right over here. That's what I need to go back and retest, right? So I know what to wait for. And if I'm wrong, I have a managed risk within that system. If I'm right, right? If I'm right, I get paid. If I'm wrong, I have controlled risk and I can wait. Okay? And what I'm trying to train my brain to is to remember to wait for the up arrow. Is very, very helpful in this case. So I know a lot of y'all struggle with what's my bigger read versus my shorter read, shorter time frame read. So most of you are going to be most comfortable on that 50-cent chart, right? Most of you are going to be most comfortable on that 50-cent chart. And then let them work it out. Let them work the rest of the trade out. 1, 2. This is coming with the biggest push. If they don't break that low, right? And look at the difference in ES. If they don't break that low. What would tell me that? Arrow up, right? I see that they're making the biggest push right here, right? Arrow up. I'll go up. Something to that nature, to that effect. Arrow up on pink bar. Sorry, I missed it. I was looking at another piece of my screen and I missed it. Does everyone see it? You had to be on it, right? Pink arrow up on 50 cent. That should release to the upside now. Why? I had a blue dot down right over here. Pink arrow up. I don't want to see it close underneath here. That's the only rub, right? Or you use if you're more conservative, you use the larger swing right here. And what are they trying to do? They're trying to get him to trap on that damn prior day's low. So what's the only problem with this entire scenario that I'm going through? It's quad witching, and they're just going to do what they want on quad witching, right? But I know what I'm looking for, right? Even if I miss it. Green dot, arrow up, pink bar. I need the arrow up. And my cheat is if I get the arrow up on a no supply, no demand, I don't have to wait for the second bar. Now this should lift, and it should not close behind this bar specifically. Should not close behind that bar. Long consolidation there now. Long consolidation. The other thing that I'm looking at, see these down presses here? So this doesn't work every time, it's just a hint, right? But see these guys right here? When I start getting arrows up above my arrows down, so see this, arrows down, arrows down, arrows down, arrows up, I generally know they're attempting to reverse the market there. It doesn't work every time, it's just a clue, especially on that 50 cent. Also, we had the biggest push of these pushes down, and they couldn't grab the low, this swing low over here to the left, right? So all of that adds up to, hey, these are little clues for me to add into my thought process for the day, right? So I would expect the arrows up on the pink bar with the no supply, no demand, the pink bar, to lift. That's what I would expect. I'd expect these guys to look like they're trapped. And I think in probabilities, that because this was the biggest push, 1, 2, 3, biggest push, these guys are now in trouble. And so what's my target? Same target that it's been the whole freaking time. Back to yesterday's volume pointing control, which would mean that if I get that right from here, right, so if I take the arrow up here, right, 10-point stop, and then my potential reward after I take off my risk is 2028 to 2033, which would mean you would have about a 60 to 70 point trade on your hands. What are you going to have to risk? That the trade will come back on you, right? So that part you're going to have to manage on your own in terms of what your ability is to read the market, right? That's a much harder task, right? A smaller task is to go, hey, I can scalp the crap out of this when it's on the second bar on the turn, right? I know where my stop is. I can scalp out of it. And on non-quad witching days, you can rip this like a mother, right? So, and maybe today on quad witching, maybe they push it. We have 15 minutes till the top of the hour, then London close at 10:30, and we'll see what they decide to do. But that's where the opportunity lies, and you know that opportunity comes out of a consolidation, right? You break out of the consolidation, and then your natural target is, if you break out of this consolidation, is that they do a slow burn up into here, right? Now, the opposite scenario there is that this fails, that you should be taking all your money off this table if you're bearish, and looking for your short entries back to the downside. That doesn't cover, that's not my read. My read is that we're not bearish. We've had a down day. We've taken some excess off, and now we're going to go and face rip this thing to the upside. That's my read on that, for better or for worse. Does that guys in the room, does that help? Any questions, guys? You bet, Brian. You bet, Randy. So now, if you're just the scalper in this thing, right? You see yet your blue dot up over here, your down arrow on the yellow, you're going to try and scalp that to the short side. Not for me. That trade's not for me. I had a bias, and I'm trading my bias. I would trade my bias. I would suggest you trade your bias in connection with the algos, right? So don't turn your algos into the bias. Turn your bias and then look for the algos to give you a controlled way to enter and exit by controlling your risk. Otherwise, you're just, you're just frustrated, right? See how that just disappeared, that blue dot? This blue dot does not appear until you have 2 bars afterwards. So this green dot here appeared, right? This would have been a stop in this case, right? This blue dot appeared, showing they're pushing down. It's now stable, and so if you connect those two pieces, right? If you try to use higher time frame to lower time frame, what you would do is this: you would circle this. Chart number 25. I have so many connected charts here. I'll have to go through and thoroughly scrub this chart this weekend. There you go. So that's right there, right? So now what am I looking for in that scenario? The other way you can do that is, hey, I see my push down. I know they pushed really hard because of the little blue dot there. So now I can come, if I want, over my 15 tick, long, scale, stopped, long, scale, rip. That's how you manage, that's how you can manage the rip, that trade, using the higher time frame to the lower time frame. Hey, thank you, Leandro. I appreciate the comments. So now I just relax. I know what my target is. And that's that. See that green dot and see that blue dot? If I get a triangle arrow up, that's what I'm looking for, right? Otherwise it'll rewrite. I've got to get it to print 8075 for the continuation. Now I've got the continuation. I'd be long 80, 10-point stop, max, right? And really the stop goes 71.50, okay? And then what am I trying to do? Get it to extend. Notice I'm already extended. Where is this ideal? This is ideal when you're trading. This is ideal when you're trading at the fourth channel on the 24 tick, right? So this is all just trying to catch continuation moves. Like Dan, this would be like your cup of tea, and it's totally scalpable, right? So the way you adjust on that is you try to get the setup so that it gets close to touching the fourth channel on this very tiny chart. But the rest of these, you'll notice I don't have the bands on the 50-cent chart because I want people to work off the 24-cent to read the extension. And then what I do want people doing, right? Let's say you were looking to fade this. Okay, what I do want people doing is using their 15-cent, your different tools, right? So this is going to be called wave 1. Right? Don't go off all this. Get this. Dominant wave 1. Now I need to break a swing. Right? So this becomes wave 2. How would have this done if I did it correctly? 1. This would have been 1. Sorry. I'm doing the count wrong. It's still shaking it loose in my head. 1. Break the swing. 2. Break the swing. 3. Look for exhaustion. Right? So then on the way down it's 1 down, 2 down, 3rd down, look for the long. That's how I think it should be. That's how I think it should be run, right? I'm not perfect. I don't do it great every time, but that's how I would do it. Okay, is it making sense the way I'm explaining it, guys? And then you have to find your place where you're most comfortable taking trades, right? Like I said, this is still the target. It has been all morning long. That right there is the target up. And we'll hit it. Very, very likely. And you will have a higher rate of success with this when the market slows down after the first half hour than you will in the first half hour. You'll see some great trades, but you risk getting just run over and over, and that sucks, right? Don't let that portion happen to you, okay? If you'll wait till after the first half hour, look, I'll show you. I'm going to get out of the first half hour, and we'll just trade both ways and see. So the rules are off the edge at the fourth channel on this. That's the requirement. And the arrow up on the pink or arrow down on a yellow bar, and it has to happen first or second. Why? That's the highest standard that we have, and we'll go to 9 o'clock. Okay? And the rule is, can you get at least 1 bar or 2 bars for a scale? Okay, so let's start at 9 o'clock. No. 9 o'clock, there's econ, so let's let it settle out for a minute. Okay, blue dot, arrow down, right? So you could argue, well, Simon, if you did it the way you told me, I got stopped there because I'm not going to scale it for 3 points. That's true, actually. It's reasonable to say that. The best extension you could have gotten on this bar would have been 89. The best fill you could have gotten when it came back would have been 96, 97. Hits a scalp, right? So then it goes sideways, right? So notice I'm not coming down and going, boom, this worked. I'm not adjusting the rules. I'm adjusting to my bias, right? So I'm looking for shorts. So I put a rule in there that I need to have the shorts or longs, either way, but they have to come out the fourth channel. They have to be on the turn bar or the second bar. So this puts me at my next trade, 936. This puts me in my next trade at 941. I'll circle this. This is a stop, flat out. If you shorted, in all fairness, I warned at that point, hey, don't be shorting, right? It's a difficult trade. And I would not, so I was looking for the upside break, so I would have taken that. But the way I described it, I would not have taken it. It would have taken more experience. And why was I looking for the break? Because I think we're trapped and we're looking to the upside. So now let me show you how I would have traded it. My bias is to the upside this morning, not to the short side, right? I think people are overstepping on the short side, so this is how I would have traded it just off of this, right? Because I would have done this. Still skip the first half hour. Erase all the lines. That would have been my long. I'm also going to combine it with the 50 cent in just a second, but that would have been my long. That green dot down followed by this. I think I had one stop earlier. So I had green dot here that stuck, right? But no arrow up with the pink bar. So it's all about getting, hey, I want the perfect kind of combination of what I'm looking for, right? So if I'm willing to be aggressive, I would have taken this, right? And then we come down, right? We roll up and I'm like, oh, okay, we've come down to the fourth channel. If you'll notice off that break, that became a 50-60 back. That's the next trade. I'm ignoring my shorts because I don't think it's short. Okay, that's my next trade. And obviously we got paid on that. Now you're just sitting there. And then I'm using the rest of this just to determine how to manage that long or not manage that long, right? But it's just a matter of building that process over and over again of what I want to see. Now, if I combine that with the 50 cent, what really gave me the clue that we were going to lift, it was easier to see on the 50 cent. So here's in the morning, right? I don't want to trade in the first half hour, but see these two arrows down at the bottom, and then you get the arrow up with the pink bar, and I had this green dot down here, told me higher, right? Then we push, right? This is in the 915, and I would have said the same thing, except the only difference being here is that when these arrows appeared above the arrows down, and this one appeared pretty much parallel to it. But I would have said what I said earlier, exact same thing. I'm looking for the long, and I would have. I won't take it out of consolidation like this. I want it on the turn bar, but because my bias is long, I might have taken this, or I might have at least gone and looked on the 15 tick chart to see if I could have gotten an entry, and then I would have come down here and I would have said, oh well, look. This is clearly apex trap. See that right there? Apex trap. I would have wanted to take this. I'm showing you where you have to adjust. That one bar stop is easier on the 15 tick, and I would suggest you do it on the 15 tick than it is over here, right? But if you go through this process and you kind of go, I want up, down, and I don't want this swing to break. So let me explain this for a second. Because it's a higher time frame, right? Two of the fundamental concepts in the room are break the swing, trap the seller, trap the buyer, etc., right? So when you're looking, you want to take that guy out. You want to take that stop out. This dot failed, but now I get this dot down here with the arrow on it too, the blue dot. Same concept, pink bar up. Now, you can't, when you're doing this off this time frame, you have to use your swing as your stop. You want to push back in for the launch, right? It very rarely. Okay, so this is going to change pace. When the VIX is above 16, it's going to look like this. When the VIX is below 16, the 50 cent will look like this because the bar is just too big. But if you look in all this area, here, let me erase this. Oh, I see why that trade left me. I got to get rid of that. Okay. When you look at this area, and now you mark it off. So this is the first place I had a clue Damn it, I gotta get rid of that. This is the first time I had a clue, hey, we could go higher, right? So I'm gonna go back to that over here. It's not linked, of course it's not linked. Well, that's just weird. Oh, there's the problem. There we go. So this is the first place, right? So what am I looking to see? In my most conservative mode, once I get this right over here, I want an up arrow with a pink bar. And what's the challenge to this is I'm coming off of this, so I'm going to have to adapt a little bit, right? So let me show you the two ways to adapting. There's two ways to take this trade, right? This is, in my opinion, is the strongest, not because it has the highest win rate, but it has the best extensions when it connects. I want this arrow up to be on my pink bar naturally. I'm going to show you the alternative to that entry in just a second, right? Then I get another blue dot right here. Okay, that's where the other blue dot is. And now you will see, so when you look through this sequence, if you said, Simon, I'm just your most conservative trader, I want it very, very specific. So what you need to be able to control your risk, take fewer trades, and get the win rate is you need this bar right here. That's the bar you need, right? It's one bar, it's a 10-point stop. Even if you're trading off the 50 cent, you need it to line up there, and you got to be able to catch it, which means you have to pay attention because sometimes it goes fast. That is the trade you need. It comes down, turn bar, second bar off the turn. That is the trade you need, and you're using the 50 cent to identify when there's a surge in delta, and then you're using the 15 cent to pinpoint your trade. Now, what's the problem with that? The problem with that is if you come over here and you go, well, this lifted and this lifted, how do I catch that? I'm not interested in the how do you catch it part. What I'm interested in is if I'm trying to get someone paid, which is the only reason for running this room, right? How do I get you to get paid and not worry about the trades? Well, it's very, very easy. If you get this and you get this, you're good to go. Now, plan B, a more aggressive trader. More aggressive trader is, oh, well, I've got this circle over here. I've got this arrow up over here. I then take this pink bar with a 10-point stop, and I don't want it to close below. Scalp up. Now you get the arrow here, and it's on the pink bar. Good to go. Now you get this arrow up on the pink bar, and it's good to go. The difference is that trader who's more aggressive is going to take stops sometimes because he's going to get, I'll show you where. Well, this is right on Incon, but so let's say you didn't have to touch the fourth channel, right? You're going to get stopped there, but what I wanted to show was there's got to be one in here. Come on. Well, it didn't have a failure so far today, but there's one in there where there's a failure. You'll have a higher failure rate, and it's easier to go, I'm looking for one piece of evidence, and then you tie in with whatever's going on the bigger picture of the charts, etc., etc. And by the way, you could have said the same thing here as well, right? I want one chart, I want one bar, and I want the entry. So once you get this, which you had it right here, this is where you know that chart is working. Why? This blue dot's not going to disappear. Why? Because this dot is not valid until this bar prints, hence where you know. Now you could go, that's valid. I'll take my arrow down with the yellow dot on the 15. You can do that. I prefer to miss that trade. So let's pick it up from here. I would prefer for it to go, oops, up, then give me the turn, and my most stringent requirement is on this turn, I get a yellow dot with an arrow on it, or the second bar is a yellow bar with an arrow, and my third is arrow, and then the yellow's on the third bar. So it's arrow, a neutral bar, and then the second bar is yellow, right? So it takes 2 bars to connect them, kind of like this, arrow, then yellow bar, and then the stop is 10 points behind this yellow bar, and preferably not in consolidation. So that's why I don't want to take this, because I already know from looking at too many samples, there's just too many freaking stops on this. There just are too many stops from this consolidation point. It's just simply better or it's either on a turn, or the last piece is it's breaking a consolidation. So 1, 2, 3, 4, and the arrow up is on the break of that consolidation, right? But it really, I know if you're new, that seems like an awful lot of options, but it's really not. It's really not. You're trading your bias, right? You're trading your bias, and then you're fitting the algos. So like for me, for example, even if this bar had been yellow, I'm not going to short it. Why? I'm in fair pricing, and I'm trying to get to this volume point of control, right? I like trading up here, I like trading down here, and I need to be relatively either small, cautious, or not participate in this area because I want to trade where I have the greatest advantage, right? And if you'll notice, ES is quietly turning into trend day up. Look at the lack of rotation up and down through there. So you just let it work, let it hit its target, and the extended target, I really think, is up here. If you're a patient trader, someone like Ron or someone like Peter, who y'all have more ability to handle the rotations and counter rotations, then that's your ultimate target to the upside, right? So at any rate, that's my 2 cents. I hope that helps. All of this is recorded on YouTube, so you can watch it. I'll post the link when I'm done. Anyways, that's all I've got. That's all I've got for today. I'm going to go enjoy the rest of my day. I've got to make a phone call here in just a little bit, and but y'all all can make it. I got to tell you, and I'm not going to name names because it's no one's business, but there are some people in here pulling some big checks from Apex. It's really, really cool. Congratulations to you guys. I'm really happy for y'all. It's not an easy thing to do, okay? And there's not just one right way to do it. The only thing I'll say is the people who are pulling money are doing the same thing over and over and over again. Most of them are trading only to the long side, not all of them, okay? And they're just repeating over and over. If you said, Simon, what are you going to do? Put a gun to head. This to the long side would become my favorite trade over and over. Stops are tight, potential extensions are big, right? And I can handle the 15 tick chart. Let me show you why. Here, I'll go to yesterday. So let's see how many stops I took coming down. Okay, so I'm looking for, let's just keep it easy so that we can read the chart. Right? Let's just keep it easy so that we can read the chart. So first of all, let's skip past 8:30. You're already aware it's open drive lower. I'm looking at 9 o'clock. Okay, so let's do it without, just keep it simple, and then we'll build on it, right? 1, scalped out, stopped, right? 1. 2, I'm only going with the most stringent of requirements. Just going long here, I'm not going short. Touch the 4th channel. 3. Stop. No trade, it's the 3rd bar. Long, maybe scalped out, maybe stopped. Oh, well, nothing at all. It's lunchtime. I'm not doing anything. Get out at lunch, blah, blah, blah. I'm not taking the winners or the losers. Out of lunch. Long. Obviously I scalped out of it, stopped on balance. No trade. Got to be okay with that. Long. Scalped out of it. I mean, obviously you're going to be a scalping demon. Either scalped or stopped. Either way. Clearly you got scalped on that. No trade again. Fourth channel, you got scalped out on that. Long, scalped out on that. Long probably stopped there. 1, 2, 3, long. And this was B grade there. And that was the end of the day. You did okay, especially if you just traded in the morning. You got paid. Okay? So it works very effectively, and then if you add the blue dot to the mix, you have even more power. And again, you're ignoring most of this. You're ignoring most of this. If it's not in between the channels, and the best place to look for it is when you're on the 24 tick and at the fourth channel, because now you have the power. We already are very well versed on what works on the 24 tick. So anyways, that's my 2 cents. I am done for the day. It's Friday. I'll let them do whatever they need to do. I made a little bit of money just scalping 2Zs. Just nothing big. On one account. Didn't even load up the accounts. Just didn't feel like taking any risk today. So that's my 2 cents. If you'll combine location, auction market theory, and the algo, you'll make a lot of money with this. But you got to be able to combine all 3 pieces to make a lot of money. If you just focus on the arrow and the red bar on the same bar, you will have many successful days. If you'll control your down days, you will end up with many, many successful days. And my suggestion is on the 50 cent that you adjust and hope for a pushback in, so that, because you really have to, if you look at the nature of that, and again, I know no one can because it's not distributed yet, but it will be. But if you look at the nature of this bar, when you get the arrow with the pink dot on it, with the pink bar, the swing is the stop, right? So what you really want to do, and it does it quite often, is push back in, because this swing is the stop each time you get this trade, which is like this here. The swing is the stop. So what I would suggest is, if you're using the 50 cent, try to get the push back in, because it's really a 2-bar stop. And you'll notice on that 50 cent that it pushes in almost every time before it gives you the extension. It's not 100%, but it's a lot of. That'll probably change if the speed picks up, but you're going to still have plenty of times where it tests back in. Another example again here. That's valid. That's easier. It's 1-bar stop, right? This one, it's a 2-bar stop, and it didn't push back in. That's middle of the night, but that's how it is. Again, it didn't push back in. You just had to go. The swing is the trade there. That's why you need it to push back in, so you can handle the pushback against it. This is a bastardized. This is the B grade because it's on the 2nd bar. But again, you need to let it push back in to lower the stop. Again, it's the whole swing. So what you're hoping for is to push back in to get the trade. Again, it's the whole swing. So you're hoping to push back in to get the trade. Again, this is a case where it just didn't push back in, right? And you want that push back in on the 3rd bar to be very clear, right? So you want it to look like, okay, you don't want the push back in here. You want this to print, and then you want this bar to be the bar that pushes back in. Now, you can try it over here, but the stop rate increases. right? You don't want it on the third bar. Like this is a great example where you would just miss, right? Comes down, and you're gonna have to use some other method to enter that trade because it just didn't give it to you here. What you would hope is it would have given it to you on the 15, so we can look. You get the pink bar, blue dot, pink bar, arrow up. You're good to go. 10-point stop. Same trade. So you got to use both. So, any questions, guys? Yeah, please, I am. Fire away, Ed. Can you share them in general, or if that's possible? Oh, yeah, sure, no problem. Sorry, my bad. Give me a minute. Make sure no one else has anything, and then I'm going to shut it down. I'll leave the room running, but there's no reason to. And you got the move. I don't know what else. You either got it or you didn't. Oh, and look, we go to the point of control and exhaust. That is the target. Okay, guys on YouTube, thanks for joining. If you have any questions, just hit me up.